Hi, John Moran here, CEO, Keller Williams Realty's At the Beach team and the Smart Beach Investor Podcast. Today, as always, I am with Katie Luus.
Hi, John.
Hello. However, we also have a special guest, one Gil Erickson, who is an agent on Keller Williams Realty's At the Beach team. Gil, how are you today, bud?
I'm doing great. Thanks so much for having me. Glad to be a part of it.
Right on, bud. Right on. So we're going to talk real quick about what's going on in our market over the last week, okay? I pulled a report from Redfin. Redfin's a real estate group, as we know, that is out there trying to do some real estate sales, and they follow the market pretty close. What they're saying is the pandemic-driven second home boom is coming to an end, okay? We're seeing a little bit of that. Let me just tell you real quick. They're saying that vacation homes became a hot commodity during the pandemic. We saw that too. But the trend is showing signs of waning. They're saying it's because of higher mortgage rates. There's an increased loan fees now showing up on second homes that are prompting the slowdown in this sector, the second home vacation market, okay? In March, demand for vacation homes dropped sharply for the second consecutive month, according to their report. And here's what they're saying. The pandemic-driven surge in sales of vacation homes is coming to an end as mortgage rates rise to in their fastest pace in history, right? They're going up fast, causing second home buyers to back off, according to this Taylor Marr, Redfin's deputy chief economist. When rates and prices shoot up so much that a vacation home starts to look more like a burden rather than a good investment, and a fun place to bring your family on weekends, a lot of buyers are having second thoughts.
That's what we talk about all the time. The numbers got to make sense.
The numbers don't work. Do not buy it. It's a bad situation from an investment standpoint. Agree or disagree?
Agree 100%. Definitely seeing the telltale signs. And, the smart ones are cashing out while it's good. If you're in for the long haul, not a big deal. Just ride the next wave.
That's right.
But the indicators are there. So if you want to cash out, now is a great time for sure.
Now's a great time. If you're a short time player, 5 years or less, we tell folks get out. And that's kind of our thing, right? We're trying to educate folks, help them build their wealth or preserve their wealth. And in markets like this where it's getting a little questionable.
Yeah.
Yeah,
Being
definitely.
a little questionable. Get ready to maybe take advantage. The second thing we're watching is the Mortgage Banker Association came out and said they're lowering there's a lower mortgage demand outlook for 2022. There's not as many people getting loans.
Yeah.
They're already starting to push down expectations on that, which again, we're seeing, especially in our area with these condos, a little bit tougher to get mortgages on them from an investment standpoint. And now the cost is going up because mortgage rates are up, prices are up, inflation's up, everything's up. The only thing that's not up is affordability.
Yeah.
And when affordability goes down, prices have to follow, right?
No doubt.
So that's what we're seeing. Are you seeing it with
my general seller calls? Yeah. I see a lot of people are saying, I'm going to hold tight and see how this summer goes. I want to kind of see how it's still a little dicey. I don't know what to do. Let me hold on for a few more months. That's what I've been hearing a lot of. I don't know.
You getting that too, Gil, in your talk?
It's not unusual for a lot of potential sellers to want to get one more season of high-income rentals.
Right.
But this year, I'd say that's a pretty dangerous game because it could change. I would recommend getting on the market now, delay your closing date. That way you can still capture plenty of great rental income, but still be in position to get a good sales price and get out before, a potential flood of properties come on as everybody else starts to get on the bandwagon. You want to be ahead of the curve.
Yeah.
I think we saw it. I counted this morning in the areas that we cover from Panama City through 30A, Destin, Fort Walton Beach. I think I saw something like 114 new condos on the market in the last 7 days, 40, 50 some houses. Houses are a little bit behind, but there's not as many houses, period.
Yeah.
So that's what's going on. We're starting to see some increase in the number of listings. And when the number of listings go up, it's harder to keep that high sales price. Just the way it is. But that's something to look at. We do have buyers. I think Carolyn said she's working with.
She said she got 12 active buyers.
Right.
Yeah.
But she also said that they're
tightening up.
Not as easy going. They realize that things are starting to turn. They're not really just in frenzy mode like before where they'd buy anything unseen and just jump in with both feet. They're really thinking about it.
So there you go. The vacation rental market getting a little bit spongy. Interest rates, mortgage rates are going up. Inflation's going up. all that stuff causing affordability to go down. We're expecting some amount of change in the market. So as always, what we tell folks is if you're a long-term hold, who cares?
Yeah.
Ride out the market. Ride it down, ride it back up, whatever you're going to do, you'll be fine. But if you're a short-time player, 5 years, certainly 1 year, but 5 years or less, get it out there now. Sell. There you go. That's our market right now for this week. If you're thinking about selling or buying, give my group at the Beach team a call. They'll be happy to help you out.